Well, welcome back. Let's check futures this morning. We've got a rally underway this morning with the Dow Jones Industrial Average right now up 108. The NASDAQ is up 223. And the S&P 500 is higher by 33 points right now. This following a mixed market yesterday. The S&P 500 and the NASDAQ finishing higher as chip stocks rebounded from last week's sell-off. Interest rates this morning, meanwhile, look like this. Take a look at rates where we see the 10-year yield pulling back down 0.5 of a basis point, sitting at a level of 4.55%. We're all waiting and watching on Kevin Warsh and his first policy meeting next week as the new chairman of the Federal Reserve will begin leading that meeting next week. Speculation increasing in the markets that a rate hike is possible through periods of persistent inflation. Joining us now is former Treasury Undersecretary, former World Bank President, and American Global Strategies Vice Chairman, David Malpass. David, great to see you.
Good to see you.
Thank you so much for being here. So what are your expectations for next week's big meeting? Kevin Warsh is first as chairman.
I think they'll be setting the stage, so I don't expect a rate hike at that meeting. But the issue is, how do they talk about growth? It was really good. The president over the weekend, President Trump, said growth is good.
Yeah.
So that's going up against the Federal Reserve models, where they kind of think if you have too much growth, they should take away the punch bowl. You know, they should throw cold water on growth. And so he was really clear on why it is. If you've got growth, you've got more people producing, and then that helps on the inflation front.
Yeah.
And you can't do that if you keep raising interest rates on small businesses. So that's my theme, really. How do we get credit going to small businesses so they can fix the supply chain?
Well, I would be shocked if Kevin Warsh comes out and raises interest rates this year. What do you think?
I don't think they'll do it this year. Goldman Sachs was out, I saw, and saying that there won't be a cut until 2027.
Yeah.
So even that is problematic. You know, the U.S. and the president said it very clearly. If we're such a strong country, why do we pay more interest rates than someone in China? It doesn't make any sense. And the markets, I think, need to have confidence in the Fed and figure out that the dollar is the best currency in the world.
Absolutely. Samir, you're advising companies on how to deal with the president's policies and work with this administration. What do they say about growth right now?
Well, look, they're very excited around the fact that we're going through this period of reindustrialization in the United States, an exciting time for the energy markets, for AI, for chips, and finally bringing back those jobs home. And the best part is, and this has to do with the kind of elegant foreign policy that the president has espoused, is we're in some cases getting foreign countries to pay for that renaissance. So Japan, Korea, even in the Middle East, you're seeing foreign direct investment come in at waves that's generational. And I think that's really the boon for the U.S. economy, where you have all these partnerships that are rebuilding industry here at home. Now, there's a long way to go, but I can tell that markets are excited about that. Now, things take time. You have a transformational president with a transformational agenda. These things don't change overnight. We've had decades of poor planning and poor industry that's now turning the corner, and I think people are very excited about that.
And to your point, the president will say it's $18 trillion in new money, Kevin, come into this country. And David, you've got an op-ed in the Wall Street Journal. I want to talk about what you write, because you said that the Federal Reserve's balance sheet needs to shrink. And of course, that is exactly what Kevin Warsh has said. You write that Kevin Warsh has correctly advocated for regime change, which would include reducing the portfolio size. What are your expectations there? And as he cuts down the balance sheet, is that indirectly a tightening?
No, I think it is pro-growth.
Some people say it is.
You know, economists argue about this all the time. But look at their record. Over time, the Fed's allowed these big swings in inflation and in deflation even. That was the 1990s. They never explained why. And on the balance sheet, they claimed that it was going to be stimulative. But think, in the Obama administration, they bought $9 trillion of bonds and didn't get any growth out of it. So there's a big mistake going on in economics. Kevin Warsh can begin to change the economic models so that people get it, that the Fed shouldn't be in the middle of every market in the economy. They want to be, because it makes them more powerful. That's what I was writing in the journal. But I think he's confronting the members of the Federal Open Market Committee. They're really entrenched in economics. And so this fight is going to have to be staged in multiple multiple rounds to explain to the country that the Fed can have confidence from markets by getting out of the way, not by being in the middle of everything.
Yeah, that's a great point. And he has said he wants these family fights. He wants the governors around the table to challenge him.
Let's go with it. Yeah. Regime change, and you have to have a new way of thinking about the interest rate when there's growth.
And communicating about it. Let's talk about the key economic data out this week. Samir, we've got the CPI number out this tomorrow. The expectations call for a gain of 0.5%, and year over year 4.2% for the CPI. May PPI, Producer Price Index, out on Thursday. They were expecting an increase of 0.7%, 6.4% year over year. That last month PPI was not a good number. Your thoughts on how companies are dealing with this spike? Do you agree with the administration that this is going to reverse entirely once this war is over?
Well, clearly, there are geoeconomic and geopolitical considerations that I think are casting a shadow over certain features of the market. Now, I think the challenge that boards of directors have across the United States is, are they going to be beholden to short-termism and view these challenges as, idiosyncratic and pain points that are going to limit capital expenditure, limit their ability to hire, and limit their ability to provide products and services at scale to the American consumer at an affordable price? Now, I think you might see that in certain industries that are uniquely menaced by inflationary concerns like the retail sector. But for those that are investing in kind of the harder, grittier, more industrial jobs and rebuilding this country, I think they look at this as just a short-term blip. And really, the long-term secular growth of the United States economy is geared towards more self-reliance on our supply chain and building economies of scale. And I think that's where the mindset is.
You agree?
Yes, but you need to do a lot more than we're doing now on the job skills, on manufacturing, on bringing back things that Americans can make here in the country.
100%.
And that's going a little slow, and we need a lot more electricity. The grid needs to be fixed. Those things are big projects.
Yeah, we've got a big announcement coming up this morning from Meta. Meta is going to talk just about that with their Workforce Academy announcement. We'll talk with the president of Meta here later on in the show. David, always a pleasure. Good to see you.
See you.
Thank you so much for joining us. Stay with us. We'll be right back.